Good morning, friend. This is Sharekhan from Fundamental Research Desk. Yesterday we have released cement earnings review for the Q4 FY13. What has happened during the quarter is that despite being a seasonally strong quarter, the most of the cement companies have posted a degrowth in their earnings on a year-on-year basis when we compared. Now coming to the top line front, the cumulative revenue of the Sharekhan cement universe grew by just 2.4% on a year-on-year basis, which is supported by the growth in the realization by 1.9% on a year-on-year basis, whereas the volume has declined compared to a year ago quarter. Coming to the more specific on the volume front, overall the volume has been disappointing, but compared to our Sharekhan cement universe, it is a mixed bag where India Cement and Madras Cement have posted a better volume growth on a year-on-year basis. Their volume growth is in the range of 6% to 11% respectively, mainly on account of a low base effect, whereas the other company like Shree Cement, Ultratech, and on the non-coverage space ACC Ambuja, they have posted a degrowth in their volume in the range of 3% to 6% on a year-on-year basis. So overall, this is degrowth on the volume is on account of slower than expected execution of an infrastructure project and slower offtake from the real estate segment. So this is the key thing on the volume front. Now moving ahead on the realization front, when we look at the average realization for the Q4 is higher by 1.9% on a YOY basis, but the same as lower when we compared on the sequential basis. Now in this quarter, normally the sequential basis we could see a improvement on a sequential basis, but rather than that this time there is a contraction. So as a result, on a YOY basis there is only a 1.9% growth as against the historical trend of a 4 to 5% of growth used to see historically. So the realization growth is limited just to 1.9%, and as a result the revenue growth has also been limited. Now moving ahead on the cost front, when we look at even in this quarter, the cost pressure continues to keep margin under pressure. Now, cumulative basis, the Sharekhan cement universe have displayed a margin contraction of around 200 basis point on a YOY basis to little over 21%. Now, region wise, if we look at the south based company like India Cement and Madras Cement, they have witnessed a higher this margin pressure in the range of 500 to as high as 700 basis point, whereas the other company have displayed little lesser pressure on the margin front. Now this pressure on the margin is on account of increase in the diesel price and also increase in the railway freight. So the freight has largely played a role on the margin contraction. So this is on the margin front. Now moving ahead on the earnings, if we look at the cumulative Sharekhan cement universe have posted a degrowth in its earning to about 18.3% on a year-on-year basis, and company wise when we look at Shree Cement is the only company which have posted over 100% of positive growth on earnings, which is again backed by the low base impact and also a jump in the EBIT contribution in the its power division. So this is on this Shree Cement front, whereas the other company, if we look at like Ultratech, have posted a degrowth of over a 16% on year-on-year basis, whereas the other company, which includes the south-based company, have displayed a degrowth of as high as 35% to 60% on a year-on-year basis. So overall, this is the earning performance of the cement sector and also the cement universe of Sharekhan. Now on the outlook front, what we believe is that the demand environment and the offtake to improve from the second half of FY14 and on realization also likely to be stabilized from that period. So we believe that the performance to improve from the second half, whereas the first half is still there is concerns in terms of poor demand and the volatility in the cement pricing. So we maintain a neutral view on the sector, whereas we are selectively positive on the large size space. We are bullish on the Ultratech, whereas on the mid size space we prefer Orient Cement Limited, which is a demerged arm of Orient Paper and yet to get listed in the market. That's it from my side. Thank you.